Hi, in my Hindustan Foods video, in the comment section, one investor Mr. Sai Prasad asked me regarding three stocks: IRB Infrastructure Limited, Rupa, and third one is Trident. So in this video, I'm going to resolve his query regarding his portfolio. That can be helpful for many other investors as well. Hi, this is Anik Mitra. I am a SEBI registered investment advisor with 15 plus years of experience as a research analyst with various corporate. So let's start. I am going to start with IRB infrastructure. Let's try to understand regarding the company, regarding recent development. IRB recently IRB board has approved transfer of their Vadodara Kim VK1 HAM project to public InvIT by Q3 FY23, and it is expected that around 3,400 crore of inflow will be there from this from transferring this VK1 HAM project. So this excludes debt. So obviously, this is a good thing for the company. Like the company will get some handsome inflow due to handover of the project. The total order book of the company stood at 15.7 crore. Out of 60.5% is EPC, and rest 39.5% is O&M. The company told there was no loss funding for its private bought projects. With lower debt levels and higher tariffs, these projects will now self-funded. And as more projects move into execution, obviously the revenue would pick up. And this is going to happen in FY23 and FY24. So these things are steady, looks good. Not, I would not say it's fascinating, but yes, it is good for the company, and this is the way how company earns money. Now, as far as its financials are concerned, this is almost a 15,800 crore market cap company. So if we like when I take you through the financials of the company, you will see uh, in recent quarters the company is doing quite steady, in a steady way. In June quarter, company reported 1925 crore of top line versus 1626 crore in June 2021. Operating profit has jumped from 666 crore to 1027 crore, and net profit has also jumped from 72 crore to 363 crore. So it looks quite good. Even Q4 also, Q4 FY22, the bottom line was 174 crore. So from compared to previous quarter also, there is almost more than double. Means there is a jump of twofold, more than twofold, quarter on quarter basis, and year on year basis it is more than fivefold. Bottom line I'm referring. So this is largely contributed by fall in the decline in the interest expenses. What the company did, company has raised fund, that is 5,347 crore through its preferential allotment, and through it has paid back a big part of their long-term debt. So this helped company to reduce the spending after uh, interest expenses up to a certain extent. Most of the long-term debt has been repaid, and uh, let me tell you, in FY21 long-term debt was 16,500 crore. Now it is after FY22 long-term debt is not there, like that has been fully repaid. So this is a good sign in terms of its bottom line and all. Top line is bit stagnant, I would say. There is no major growth if we consider last uh, few years performance, full year FY22 company reported 5800 crore of top line. Although it is bit higher than COVID impacted 5300 crore, but we have to keep in mind that COVID led FY21 had a low base. So in that respect, it's, I would say it's stagnant. Its performance top line is stagnant. Uh, if we consider previous years FY19, it had a top line of 6700 crore, FY20 6800 crore, 6850 crore rather. So still it failed to touch pre-COVID levels in terms of its top line. Bottom line has performed quite good in FY22 compared to COVID-led FY21. So comparison will not be very much helpful. But we have to keep in mind that previous years, means before COVID, company used to report like 1400 crore in FY19 and FY18. For both of the years, company reported more than 1450 crore of bottom line. Compared to that, FY2022 bottom line was only 550 crore. So somewhere company has missed out, although the company has repaid its debt. Now it can catch up, but still it is way miles away from its FY20, FY19, FY20 performance. So ROE is significantly low, around 3%, and promoter holding is 34.2%, quite low, and 49% of promoter holding is pledged. So all these things we need to keep in mind. Only good thing what I have found, see, the whatever ham project they have transferred, this is a part of the policy, or let's say this is the way of development. This is a good sign of management. So this is quite, I would say these are routine things, and these should be done to operate the company in a good way. So efforts are there, is visible, the company is doing in terms of operation they are doing good, but financials are still laggard compared to last few quarters. Company's bottom line has started performing due to repayment of debt and all, and that's why it is coming up gradually. So there could be some little price appreciation in terms of stock prices, I'm referring. In terms of stock prices, there could be some price appreciation, 5-10% price appreciation might be there, but I am neutral in this particular stock considering all the elements. So this is my take. I'm neutral in IRB infrastructure. The next one is Rupa. Uh, Very much into hosiery business, along with close peers like Dollar, Lux, and obviously just a moment. Yeah. So I could extract a few information from the management. The company is planning to foray into new markets of Africa, Middle East, Bangladesh by appointing new distributors. So basically, they are targeting export market, and the management has also told they want to double their revenue from the export business. Currently, their revenue from export business is around 2% of their top line. So if we consider its revenue split geography wise, we would find like in east they are the biggest operator. 42% of the revenue comes from the eastern India only. Northern India 28%, west and central is 17%, south is 8%, northeast is 3%, overseas 2%. So the company is trying to double their overseas revenue in upcoming sometime. And the company, to increase its penetration, the company is planning to expand its exclusive brand outlets from 50 stores in FY23 to if 200 stores in FY25. Obviously there are some cost attachment in it, we have to keep it in mind. So obviously some cash outflow will be outflow will be there, so they need to incur some expenses for expanding their revenue. We need to understand what sort of revenue will be added with addition of each and every outlet as per the management. We need to understand. So the company is expecting one division is will be going doing good for the company, 200 crore from the thermal wear revenue in next 2 years. This is a very good market, huge market, and Rupa is a prominent player in this particular segment, thermal wear, those winter wears basically. So 200 crore they are expecting from their winter wear business in next 2 years. They are increasing their share in premium and super premium category. So obviously it can help them in terms of margin. Obviously when you will increase your share in the premium segment, obviously margin will be expanded, because premium segment is high margin segment. uh, Company management has actually missed out FY22 growth guidance of 18%. Softness is demand is visible. Raw material prices are high. All of us know that raw material prices are very much elevated, and that is actually impacting the margin as well. So if we consider its financial, mm, in terms of valuation, it looks cheap than its peers. Uh, this is a good thing, but overall sector is basically bit laggard at this point of time. So there I didn't find any major trigger in the company, at least at this point of time. So if we consider its financial, in June 2022 its top line is down. Its top line is stagnant rather, around 215 crore versus 218 crore in June 2021. Operating profit has fallen from 42 crore to 18 crore, and net profit fell 38 crore to 15 crore. So performance was not good, and obviously pressure in the cost and stagnant demand is the main reason behind. So as long this situation will prevail, this will not good for the company. So I don't find any major trigger in the company at this point of time, although in terms of valuation it looks quite cheap. 14.92 is the PE of the company versus 74.78 of Page, quite high. And obviously Page is the biggest player also. Dollar is 16.23, Lux is 16.41. So compared to that, its performance, its valuation wise, Rupa looks quite cheap, but overall demand scenario and input cost is a challenge for the entire sector at this point of time. So I don't find any major trigger for the short term mm, period. So that can that might impact the stock prices. Stock prices fall in recent past, and it may remain soft in upcoming some time. And when things will start going in favor of the company in terms of demand scenario, in terms of companies input cost, then it may start doing good. But at this point of time I don't find any trigger in the company, and it may remain soft for some period of time. And the third one is Trident. Trident is basically a conglomerate, uh, diversified player. They have their business in yarn, in home textile. They are into chemicals. They are into paper. So they are doing so many things. So company has performed quite well in terms of its financials, its operation. Everything has done good for some time, and that has impact. Their performance was good, so valuation was also reached at certain point of time. So that has been basically discounted. I would say valuation was cheap at certain point of time when operation and everything was doing well. So it has already discounted, and stock price has also performed quite a lot. So afterwards stock is correcting. Now there are some softness in the company. Yarn business, if we consider yarn business, yes, yarn business is little bit under stress. The yarn industry is little bit under stress due to high raw material cost. Cotton prices are high. India's market share in US is a concern because they are into home textile business, and home textile, India is a major, means most of the Indian home textile players are targeting US and Europe market. US market is one of the key market. So in US cotton sheet segment, means India's market share in cotton sheet segment has fallen from to 50%, and terry towel has fallen to 40%. We need to keep in mind this company Trident is one of the major player in the uh, terry towel segment. And in this period of time in terry towel segment, India's market share has fallen to 40%, and who has increased their market share? That is China and Pakistan. In US they have increased their market share, and this is about January to March 2022. So capex, like, so demand scenario is bit weak obviously. Yarn business is uh, obviously a little bit struggling. There is nothing fascinating in the paper segment at this point of time. Sulfuric acid chemical business was doing good, had a good margin. Entire industry was enjoying some good margin in this basic chemical, from the basic chemical, as price was elevated. But how long this price will remain elevated, that is a concern. And as the textile segment, the major segment of the company, uh, the industry is under stress. Yarn is under stress due to high raw material cost and all. And textile, home textile business in US, Indian home textile market in US is has shrunk rather little bit. So these are the reason behind why immediate outlook of Trident is not that bright. Obviously company has long-term planning. They have a plan to do capex. The management has proposed a capacity addition of 98,496 spindles and 3,600 rotors, and in the sheeting business it is adding an additional capacity of 70,000 meter per day. So company has decided to spend to do a capex of 13,800 crore, quite big. But yes, obviously input cost pressure is there. uh, Whatever the valuation was there in terms of its performance, its bottom line and all, that has been discounted. Now input cost is there, it is impacting margin of the company. And yes, capex is there, so some cost outflow will also be there, although company has planned this large capex. Obviously big outflow will be there, and at this juncture demand scenario is not good, so this is not a very good news for Trident. So immediate term outlook is not fascinating for Trident, that I would say. So if you consider these three stocks, I would say IRB is still better positioned than these two stocks if you consider uh, short term basis. But yes, in the long term scenario can change. As I told, input cost is a major thing for this all of these industries. So Rupa and Trident can always do well with some release in the input cost, some relief in the input cost. So at this point of time, neither of the stocks looks fascinating. And among these three, Rupa and Trident has immediate term, means immediate future is bit gloomy. And as far as IRB is concerned, long term I am quite neutral. Mid term there could be little price appreciation due to this repayment of debt which is reflecting in the bottom line. That is all to say. So thank you for watching my video, and I will keep on doing this type of uh, knowledge sharing video going forward. Please note, these are not any buy or sell recommendation. This is just for knowledge sharing. uh, I would request all of the investors who are watching my video to check with their advisors to uh, do their for their decision making, and do subscribe my video, and I expect a like uh, in my video. Thank you for watching. I'll be coming with more fascinating videos coming days with some stock ideas. Thank you.